Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to be back with you to break down the latest action in the markets on this December 16th, 2025. We've got a packed day with mixed signals from the indexes, some eye-catching moves in large-cap stocks, and big-picture economic updates that could shape your long-term investment strategy. Whether you're in for the long haul or keeping an eye on short-term trends, let's dive into what's moving the needle today and how it fits into the broader wealth-building journey. First up, let's talk about the major indexes and how they're setting the tone. The S&P 500 took a slight dip today, down about 0.25%, hovering near the 6,800 mark. It's holding steady above key levels despite some cooling momentum in tech. Meanwhile, the Nasdaq managed a small gain of just over 0.1%, worth showing resilience with tech heavyweights finding some footing. The Dow, however, wasn't as lucky, dropping a more noticeable 0.5%, reflecting broader concerns in other sectors. These mixed results signal a market in transition, and for us long-term investors, it's a reminder to stay focused on fundamentals over daily noise, though short-term rotations could offer tactical opportunities. On the economic front, there's a lot to unpack. The November jobs report finally dropped after delays, showing a modest addition of 64,000 jobs, slightly better than expected, but paired with a jump in the unemployment rate to 4.6%, the highest since late 2021. This sluggish labor market data has some experts warning of a cooling economy, while others like JP Morgan's David Kelly see a potential rev-up in the first half of next year. Meanwhile, the Fed's latest moves are under scrutiny. Atlanta Fed President Raphael Bostic signaled no rate cuts in 2026 due to inflation worries tied to potential GOP tax policies. And with the race for the next Fed chair heating up, Kevin Hassett and Kevin Warsh as frontrunners, investors are keenly watching how policy might shift. For long-term players, this uncertainty underscores the need for a diversified portfolio to weather potential volatility. Now, let's zoom into the day's big winners among large-cap stocks. Tesla led the charge with a solid gain of over 3%, continuing to capture attention as it pushes forward with autonomous tech testing in Austin. Comcast also had a strong showing, up more than 5%, possibly reflecting renewed investor confidence in media and connectivity plays. And Affirm Holdings surged nearly 12%, a standout in the fintech space, hinting at growing consumer finance demand heading into the holidays. These moves are exciting for short-term momentum, but as long-term investors, let's keep an eye on whether these gains are backed by sustainable growth drivers or just seasonal hype. On the flip side, we've got some notable decliners dragging down parts of the market. BP took a hit, down over 4%, as energy stocks grapple with oversupply fears and falling oil prices. Pfizer also stumbled, dropping more than 3% after issuing 2026 revenue guidance below Wall Street's expectations, a reminder of the challenges even big pharma faces with generic competition. ConocoPhillips wasn't spared either, shedding nearly 4% in line with broader energy sector weakness. For us focused on the long game, these dips could be entry points if fundamentals remain intact, but near-term headwinds in energy and healthcare are worth monitoring. Looking at the market movers shaking things up by volume, NVIDIA remains a focal point, inching up slightly today and staying central to the AI narrative with its massive market cap. Tesla, again, was highly active, reflecting ongoing investor fascination with its every move. And Pfizer saw heavy trading too, likely tied to that disappointing guidance news. These names are the pulse of the market right now, and while short-term trading volume can spike on sentiment, long-term investors should dig into their strategic positioning, especially with AI and EV trends still unfolding. Speaking of volume, the most active stocks today paint a similar picture. Alongside NVIDIA and Tesla, we saw heavy action in American Airlines, up over 4%, as travel demand speculation picks up. Canopy Growth also caught attention with a 10% jump, fueled by optimism around potential cannabis rescheduling under President Trump's comments. These high-volume plays can signal short-term opportunities, but for our long-term focus, they're more about understanding where speculative capital is flowing and what that means for broader market sentiment. Shifting gears to earnings, This week's calendar is loaded with names to watch. We've got heavyweights like Micron Technology, Nike, and FedEx reporting soon, each offering a window into critical sectors: tech, consumer discretionary, and logistics. Micron, in particular, is one to keep tabs on, given the soaring demand for memory chips tied to AI infrastructure, though its stock slipped a bit today ahead of the release. Nike's results will shed light on consumer spending trends, especially in key markets like China, while FedEx could signal how global trade and holiday logistics are holding up. For us long-term investors, these reports aren't just about quarterly numbers, but about spotting enduring trends in innovation and consumer behavior.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Let's also check out the top large-cap performers over the past week. Royal Caribbean Cruises sailed ahead with nearly a 15% gain, likely riding a wave of optimism around travel recovery. American International Group wasn't far behind, up over 13%, showing strength in financials, and Carnival Corporation gained almost 11%, reinforcing the bullish sentiment in leisure and travel. These weekly movers highlight pockets of strength that could persist into 2026 if macro conditions like lower rates support discretionary spending, something to consider for long-term portfolio allocations. On the other end, the past week saw some large caps take a beating. CoreWeave dropped over 18%, reflecting broader concerns in tech infrastructure. Oracle stumbled nearly 17% after disappointing results, and Broadcom shed over 15% as AI stock euphoria cools. These weekly losses remind us of the risks in high-valuation growth areas, especially in tech. For long-term investors, this could be a chance to reassess entry points, but patience is key to avoid catching a falling knife in the short term. Wrapping up with sector performance over the past week, utilities and consumer defensive stocks held up best, with minimal declines or slight gains, showing their classic defensive appeal in uncertain times. Basic materials also outperformed with a 1.7% gain, possibly tied to commodity demand expectations. These sector trends are crucial for long-term diversification, offering stability when growth areas like tech, which dropped over 3% this week, face pressure. On the weaker side, technology was the biggest loser, down over 3%, as AI-related names took a breather. Energy also lagged, falling more than 3%, hit by oversupply worries and declining crude prices. Communication services rounded out the underperformers, reflecting mixed sentiment in media and tech crossover spaces. While these short-term sector declines sting, they can signal rotation opportunities for long-term investors looking to balance exposure across cycles.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.